Hey everybody, so I just wanted to make a video today. I've been a little bit busy, so I couldn't make one yesterday, but I think today is probably a better day to make a video, right before quadruple witching tomorrow. So if we're looking at the futures right now, things aren't looking too good, pretty red. But given how many days we've gone straight up for now, I believe it's like two, three. But anyways, we've gone up quite a bit, so it makes sense that we're pulling back here. Now I do want to go over to the commodities and kind of show you guys what's going on over there. So let's see, commodities, real-time commodities. Kind of see gold, silver, that's kind of fading a little bit. Palladium, crude, Brent, these are back over 100. So that's something to keep an eye on. Before it actually fell underneath 100. So things were looking bullish, but now it looks like they're going up a little bit now. And then let's see, soybeans going up, cotton, all of that stuff. And then let's go over to the SPY. So the one key thing I want to point out right here, we are running into the 200 day or the 50 day at 442.69. So I think it's pretty possible that SPY could actually run up here, and then we'll see if it rejects. Now, if I'm a bear, which I kind of am right now, if I see SPY hit the 50 day and hard reject, I know where this market's going. That tells me a lot. So if we go up to the 50 day and we reject hard, you're going to see a lot more bears jumping on puts and shorting the market. So that's something you got to be very cautious of. Now, if we do look, we see a very clear breakout. You can see that the base of this candle is actually hitting that trend line, and it's actually right at the 20 day. So from there, we just bounced straight up, and we've been basically going straight up since the 15th. So let's see, that was Tuesday. So yeah, we've been going straight up since Tuesday. And I do want to point out, oops, when I zoom in here, we didn't quite break this candle wick right here, the 441.11. So we're at 441.07. Just wanted to point that out. Now, another thing I want to talk about is generally, if you're a bear, you got to be a little careful too, because look, back in 2021, we had this correction. Well, I guess it's not really a correction, it's more like a pullback. So yeah, we had this pullback, and then look where we went from here. We just went straight up, no break. But one thing I also want to point out here is that we're under the 200 day, and we've been under the 200 day for a while. We even had the 50-day moving average cross underneath, and all these moving averages are kind of curling to the downside. And the 200 and the 100 have basically gone flat. So that's the key difference here. And then if we zoom out a little bit, you can see that this is actually curling. So when we zoom out, this is curling down. Things don't look too great. And then let me go out to 2018, kind of show you what's up with that. So here in 2018, we have this down period, fallen, 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 clear breakout. And then what did we do? We basically hit the 100 day. We didn't even get to the 50 day. We hit the 100 day. We rejected hard. We actually came up to the 50 day. We broke above. We hit the 100 day again, and then we hard rejected. And then that was basically a crash. And then, yeah, you could see that once you have a crash, you could just have straight up for quite a bit. So just one thing to point out. So yeah, in summary, watch out for this 50-day moving average. After that, watch out for the 200 day. Both pretty strong areas, in my opinion, of potential resistance, which is why I think you're seeing a lot of this after hours selling. Now, I do want to point something else out. We're just going to look at the options a little bit. So here, if we're looking at SPY's biggest flow, we actually have, oops, that kind of got cut off. Let's go right here. So if we're looking at SPY's biggest flow, we have the 418 strikes for April 14th, and there's quite a bit of premium attached. That's over 14 million premium. So that's something to watch out for. And to me, that kind of makes sense because, we're going into CPI and we're also going into earnings. So, we might have Netflix, and who knows what Netflix is going to do. So there might be some anxiety around that because, a lot of people aren't too bullish on earnings coming up just because of all the things that have been going on with the war, inflation, and whatnot. And I also want to point out right here, we can see that there is actually this block of calls that actually expire tomorrow. So you can see that they're deep in the money calls. It's 6, 12, 18, 24, 25, 26. It's about like 2.6 million in premiums, and it's going to expire tomorrow. So I don't know if these guys actually closed a lot of these out after hours because you can actually close out. You can actually buy options. I believe it's 15 minutes after close for a SPY. So that's when you kind of see some sneaky things going on. People dumping options or people buying a bunch of puts. So this is kind of one thing to note. You see all of this premium that needs to get sold. So they need to cycle out of these. So they're probably going to sell out, and that could cause the market to short-term dump a little bit. Just seeing the selling volume of these guys exiting all these calls, and you can see block. And then also, let's see, right here, these guys need to exit as well. So now we're going to go back to the charts. If we look at NASDAQ, the QQQ, I mean, we're quite a ways away from the 50-day. So, see, 50-day is at 352, so that's still about 8 points away. But I think it's more likely that we could see a double top. So I think maybe this has a little bit more room to run, and then we could hit a double top here before seeing some bigger resistance come in. But who knows? That could happen tomorrow because the futures aren't too happy right now. Now, Amazon, this is something I want to point out. Pay attention to where we closed. I mean, we're above the 50-day now, but if we look right here, look at the resistance here. When we fell underneath this area, we saw a flood of selling. Now, I go back over here. I see that this was a previous support right here in October. There's also previous support here in, let's see, what is that, August? Support here again, that was in June. So yeah, you can see that this area right here could pose as a serious resistance for Amazon. So that's about 3,170. So that's something you got to look out for. And for Google, pay attention. We're right here at the 50-day moving average. We did not close above the 50-day moving average here on Google. So the 50-day is 2,694 and 86 cents. Now let's see if we actually went above that intraday. There we go. So let's see, intraday high 2695. So yeah, intraday we actually went slightly above that, but you can see they slammed it down here at close. So that's something to pay attention to. I mean, we're just basically $2 away, or about $3 away from the 50-day moving average. And it's very possible that we could just reject here. So look out for that. With Apple, the most notable thing with Apple is just this breakout, but we're also running into the 20-day moving average, which is 161.56. So Apple's got about $1 of upside before it could see some good resistance here. And then if we pay attention to, let's see, this trend line right here, it's actually the top of this green bar right here. So that's about, let's see, 162.64. So that could also pose as resistance. And you can also see that it was this breakout area right here. Then I want to pay attention to VIX. So VIX actually broke this trend line, and you can see it's a clear breakdown. It actually broke underneath the 50, but now when you look at this trend line right here, VIX could potentially fall a little bit more and then curve back up. So we'll see what happens with the VIX. But yeah, right now it looks like it's fading, and it looks like it could find support here around 24.77. And then lastly, I want to look at gold. So last time I was talking about gold, I was talking about that gap fill up. And you can see that we're kind of getting that right now. So we had this gap right here, pretty big gap. And it was around 181.71 is what we had to fill. And you could say we basically filled it right here. So we'll see. I mean, is gold going to get back above the 20-day moving average? Maybe. Maybe gold just goes bullish again, and then maybe we could fill this gap right here. So yeah, we'll see. I mean, maybe gold gets bullish. Maybe it just does another fake out, and then it fades. So we're going to want to pay attention to the volume. And speaking of volume, let's go back to SPY. I mean, today's bullish volume wasn't all that big. It's 102.68 million for the day. When the market closed, I remember it being about like 93 million or something. And we actually had some pretty big selling near the end of the day. So you can see markets closed right here. After hours, there was a pretty big dump. You can see that in the volume right there. So some whale pretty much dumped quite a bit of shares. And yeah, when you look at the after hours, you see people buying this up, but you're seeing wick after wick after wick. So shooting star, shooting star, shooting star, shooting star, shooting star. Another one right there. So yeah, I mean, to me, it's looking like Friday could be pretty bearish. Just because we're running into the 50-day moving average on a lot of these stocks, and we're running into pretty serious resistance. So yeah, I mean, honestly, quadruple witching is pretty crazy. And I think tomorrow is definitely going to be pretty crazy just because we're underneath the 200-day moving average. So that just makes it even more crazy. And we're right next to the 50-day moving average on SPY. So I would expect a lot of crazy things to go on.